Consumers are starting to feel the pinch as inflation accelerated to 5.5% year-on-year in September from 5% in August, while at the same time the central bank says unsecured loans surged 21% to 381 billion rand in the year to June. Joining us now for a look at this and more is Etienne Leroux, he's chief economist at RMB. Etienne, when you look at those numbers, I think everybody was surprised by the number that turned out today. Was it also a surprise for you, and what sort of magnitude?
Yeah, unfortunately, yes. So we also got the number wrong. We were on the low side at about 5.2 or so. It came out at 5.5. The big surprise was food inflation. So I think people expected food inflation to go up, but not by the extent that actually we saw in the data today.
Yeah.
And that particular variable is quite important. In the month it went up by 2%, which is quite extraordinary. Year on year, food inflation jumped from 5 to 6%. It will probably accelerate to 8-10% over the course of the next 6 to 12 months.
Yeah.
So clearly there is indeed an issue. The other pressure point in the data was obviously also the petrol price.
Yeah.
I mean, this is in September, and remember the petrol price jumped by something like almost 9% in the month, and we know that the petrol price increased by a further 2% in October. So that's clearly a pressure point.
Yeah.
And obviously those two things are closely related. As energy prices goes up, petrol and so forth, it tends to have a knock-on effect on food inflation down the line as well. So those are clearly important issues.
Yeah.
Interestingly enough, Godfrey, if you take those two factors out of the data and then calculate a core or underlying inflation trend,
Which the Reserve Bank is more worried about.
well, it's certainly something that they also monitor very carefully. You'll see that the inflation picture is far more moderate. Instead of a 5.5% number at the headline level,
Yeah.
that data will print somewhere around 4.7 or 4.8%, and it has been stable at that level for some time. So I don't think we should be too worried about the underlying picture. If you look at it from that perspective.
That was my next question, because I was going to ask you, is this the beginning of a trend, or is this a surprise that will come and go?
No, I think, well, our own expectation would be that inflation will hover at around 5.5% for the next, 6 to 9 months. And then obviously, the further out you go into the future, the more uncertain it becomes, and obviously critical, then it depends on your key variables.
Yeah.
The assumption on the currency, on oil, unit labor cost, whatever the case is.
Do you want to be focusing the rand? You don't want to be focusing
Well,
the rand. I don't envy you at all.
Exactly, that's a big deal. It's a big uncertainty, especially now. But we wouldn't be surprised if inflation tracks close to 6% in the second half of next year.
Does this change your view of what the Reserve Bank will have to do? Many people have been saying there might be another cut in the system. Some people are saying today's data suggests that perhaps that cut may not be forthcoming. And also, secondly, with the kind of pressures that we've been seeing around the country as a whole, the bank may elect to hold. What's your call?
Yeah, well, a couple of things to consider. Obviously, the central bank is always forward-looking, 18, 20 months into the future. And as far as we can tell, they will still probably project inflation being in the target band on that time horizon. And then considering the fact that the economy is weak, and we personally have the opinion that I think the central bank will be surprised by how weak the economy really is over the course of the next couple of quarters. If those two things apply and underlying inflation remains relatively anchored, I still think that there's scope for interest rates to come down. Perhaps not in the next 3 months or 4 months, but certainly late 2013, I do think it's a possibility. But here we're talking only about another 0.5%. We're not talking here about 100 or 150 basis points. So we are, as it is, very close to the bottom in any event.
So what you're saying is that another 50 bips anytime within the next 6 months. But where do you see interest rates over the next 2 years?
No,
do you see us flatlining for a 2-year period, or do you see a pickup towards the end of that 2-year period?
No, I think we're in an environment, not only globally but also locally, where interest rates will remain lower for longer than people generally believe. So if we're right and they cut again, it will probably stay at that level for quite some time, at least much longer than what we've seen in the history in South Africa, strictly speaking.
And just in terms of the global impact on that, I mean, we know that there are food shortages within certain food groups around the world. That's going to put pressure. So really it's outside influence. I mean, the oil price is also an outside influence.
Indeed.
It's certainly not driven by demand within the economy. But how do you see PMI data for South Africa over the next year?
Well,
do you see it hovering around the 50 area, or do you see it staying below 50?
The manufacturing industry is in trouble as we speak. I mean, the PMI data has been below 50. It tells you that you're probably talking about a sector that is contracting rather than expanding. And the manufacturing industry will always struggle when the rest of the world and growth in the rest of the world is slowing, and particularly Europe, where there's likely to be a recession. So the manufacturing industry will remain relatively weak, and I think that's one of the reasons why you're 100% right. If the manufacturing industry is struggling, growth locally will struggle to exceed 3% in the near term, which then means that if the economy is growing below potential, it's an economy that's not generating inflation, and hence you shouldn't be too worried about inflation running away anytime soon.
What about the fact that we've seen a devaluation of the rand? And you guys do say that your devaluation will reflect in the numbers about 6 months or so down the line.
Now, that's certainly something to monitor very carefully, but just one point to bear in mind is that currency weakness and the follow-through of that into inflation is always less the case when the economy is weak.
Okay.
In other words, if the economy is growing strongly and above potential, a weaker currency will have a far bigger influence on inflation than otherwise would be the case. And I think that is exactly the reality that we face, where the economy is weak, and we shouldn't then be too worried about the pass-through effect from a weaker currency on that score.
Just on that, I mean, we have Pravin Gordhan speaking tomorrow on the midterm budget. Do you think that government deficit is going to surprise in terms of a widening government deficit when he speaks tomorrow?
It's a good question. I think there you have to differentiate between the current fiscal year and the outer years. If you look at the tax revenue data so far in the fiscal year, and also the spending data so far in the fiscal year, I wouldn't be too surprised if the deficit comes in more or less as expected, around 4.6%. But what's worrying and concerning is the outer years, especially considering the fact that the finance minister is still budgeting as it is, tax revenue on economy growing at close to 4% in next year and the year thereafter. So there may be some issues, or perhaps a little bit more tricky to achieve those 3% deficits by 14-15. It's not impossible, but perhaps a little bit more tricky.
2-3 key things that you're watching out for tomorrow from Pravin.
Well, I would like to see a little bit more information on the infrastructure spend, especially in the context of what the President said the other day.
Okay, we've got a broad figure. 4 trillion is a nice number.
It's a nice big number. We need more information on funding. Is the private sector going to be more involved, yes or no?
Okay.
I would be looking very carefully at the budget deficit, but also the numbers over the next 2 to 3 years. And then also, like normally, you would also focus on what the government is planning in terms of debt and whether the debt to GDP ratio will stabilise, yes or no. And those are key things that rating agencies obviously will be focusing on tomorrow.
Will you be watching Ben Bernanke tonight?
No, I think it's irrelevant what he's going to say.
Ben Bernanke, Chief Economist at RMB, thanks very much indeed for chatting to us.